G'day everybody, this is John Seville and this is your executive summary for the 7th of July for setups for the 8th of July going into Wednesday's trading. Okay, so the S&P 500 has yet to break open range. The open range we saw set last week on Wednesday, July 1st was a high of 2082.78, and as you can see, we have not yet closed above or below that range. Again, this just reinforces how important and how useful open range is, because the market is stuck, locked in between that range in terms of its closing values. Now, what we saw today was very, very strange activity. We haven't seen activity like this since really back in 2009. I mean, we've got this outside day where we've made a higher high, but a very low low. Complete indecision from the market, but closing at the top of that range. So, I mean, if we go back and have a look, you won't find another candle like that. So, it's this kind of weird drawdown just shows that something odd is going on. Also, if you go and have a look at the advances and decliners, approximately 2 to 1, and in some cases 5 to 1 on different exchanges. So we'll show you that now. Okay, so here we go. We can see in Yahoo Finance under the stock data research, you can see under the advances and decliners, we have in the New York Stock Exchange 296 new lows, only 50 new highs. On the Amex, you can see 169 new lows, only 6 new highs, and 180 new lows and 52 new highs on the Nasdaq. So we're definitely seeing a lot of underperformers and the market being held up. Now, is this the Federal Plunge Protection Team? Quite possibly. So how long can they hold it up? I mean, we've seen some amazing things, but right now it's definitely anyone's guess as to where this market could go. The drawdown today was especially surprising. So just going back to see where the market could go. Obviously, we're still waiting for that open range to be beat to give us that big indication. But right now, we're still looking like we're under some pressure. However, having said that, there are a lot of stocks that seem to be rebounding. So again, we will go by the Acorn mantra that it's not a stock market, it's a market of stocks. So focus on companies that have individual weakness or strength. Now, the stock in focus tonight is AKRX, which is called Acorn, which obviously we don't like to necessarily short good old acorns, but this one may be setting up for one. What we can see here is we can see a downward head and shoulders pattern. And this stock actually has currently an 11% short float, as reported by Interactive Brokers. And it looks like this, if it breaks this support level, which you can see was created here on the low of that candle, which was 41.68. So if we wait 41.63, I'm looking for that to be a drop down to 35.63. Now that would be my first target. If it then drops below that, we're actually looking at a target as low as here at 21.63. And where this level is set, of course, is an extension of this head and shoulder. You can see that we replicate that down here as to we can kind of guess where that will come into interaction with that downward trend line. But if we go back and look a little bit further out, you can actually see this is the same exact place that we had support before. Quite considerable support. You can see that big bounce here on that candle, and then that base of support here. So this will be our highlighted stock for tonight. And in terms of looking at a stop loss, I'd be looking at above the high of this candle, which is 44.69, so looking at 44.77. Okay, so that's it for tonight. Happy trading, and we'll see you all tomorrow.